Hello and welcome to my channel. I plan to record my journey towards FIRE, financial independence, and retire early in this channel. Currently, I mainly focus on sharing my Canadian dividend stock investment journey and those stocks in my portfolio. This is the way that let money works for you and generate more money. In the future, I will also add contents introducing products that saves you money. So if you are interested in these topics, hit the like button to let me know. Subscribe to my channel and turn on the notification to get the latest update. And now, let's get started. Do you want to invest in real estate? But you are afraid that you don't have hundreds of thousands of dollars at hand for down payment? Do you want to collect monthly income? But you don't want to deal with tenant issues? Then you can look into REITs, Real Estate Investment Trust, which allows you to get involved into the real estate field without actually buying entire buildings. Instead of paying a huge number of money to buy an entire real estate, you can buy REITs like stocks so that you own a small portion of the real estate. Unlike physical real estate that you will hold them for years once you buy them, REITs are more liquid, meaning that you can sell them whenever you want, just like selling a stock. Compared to buying a single house, REITs can be quite diversified. You can invest in REITs that focus on medical buildings, office buildings, retail buildings, residential buildings, and so much more. And the REITs needs to pay a minimum of 90% of their taxable income in the form of shareholder dividends each year. That's why most REITs offer high and juicy dividends. And they offer it monthly. The REIT we are looking at today is Smart Centers REIT with the ticker SRU-UN. So it's one of the largest REIT in Canada. So here we can see on their website, it has 34 million square feet of leasable space with more than 3,400 tenants. What makes this REIT appealing is that it is the largest landlord of Walmart. I believe everyone may have at least visited Walmart for once in your life, right? And 115 Walmarts out there pay rent to Smart Centers. It has 3,500 acres of land with 160 properties, and their total asset is over 10 billion. In their 2020 annual report, their 167 properties are in all Canadian provinces with 97.3% occupancy rate, which is pretty high. And they are also transferring from shopping centers to city centers, where they have announced 284 projects, which could potentially produce over 3 billion value. Around 60% to 70% of smart center tenants are essential services. And smart centers are heavily anchored by Walmart, which again guarantees the income of smart center. And except Walmart, we can also find these big names are the tenants of smart center. And if we look at the development history of smart center, we can see that they have been cooperating with Walmart since 1989. And in the future, they are also going to diversify its portfolio by transferring from heavily focused on shopping centers to city centers, including having condos, apartments, town seniors, hotels, storage offices, retails, and industrial. And I would like to see that diversification. And here are examples of how they make this kind of transition. So for their location here, we can see that they have a Walmart supercenter nearby, and in the future, there will also be the LRT lines going through here. So what they are going to do is to build residential buildings at this space here. So in the future, it will look like this. So as I said in my previous REIT videos, when looking at a REIT, we also want to look at where their buildings are located on. It's always good to have residential buildings near a public transition line, right? Because that makes people's life convenient, especially you have a Walmart supercenter nearby. So you have easy access for shopping and public transportation, and as long as their condos are built in a good place, they will never worry about lacking of tenants. So they will have consistent rent income, and as long as we are invested in this REIT, we can also have a portion of the collected rate as our own income. So it's the same for their other examples in Pickering. This is also in a great location, 5 minutes from the GO station, and also near Highway 401. So they plan also to build a lot of condos here. Again, great location. You don't need to worry about lack of tenants. So you cannot foresee that stable rent income can be collected. Except for residential buildings, they will also have senior apartments and retirement residents, which are expected to have 6 to 8% yield once stabilized. And they are also building more self-storage buildings with nearly 1 million square feet of new development. And as a REIT, Smart Centers has outperformed TSX Capital REIT and TSX Composite in the past 20 years. The current price of Smart Centers is $29.33 per share. The market cap of Smart Center is around 5 billion and the beta value is 1.22, which means SRU is a little bit volatile. So usually when beta value is lower than 1, we can say the stock is less volatile. And when the beta value is higher than 1, we will say the stock is more volatile. The dividend of Smart Center is $1.8 per share per year, and you will get dividend monthly. So the dividend yield is pretty high, it's over 6%. And what's even better is that Smart Centers did not cut their dividend yield during the pandemic. And this is a good thing for us dividend investors. The fair value of Smart Center is calculated to be $49.05 per share, which means the current price is undervalued and is actually 40% undervalued, meaning that there's still space for the price of SRU to increase. And if we look at the trading of SRU insiders, we can find that in the past month, SRU insiders have bought more shares than they have sold, meaning that insiders are more confident in this REIT. As retail investors, we are always happy to see insiders buy more of their own stocks. Currently in my portfolio, I hold 20 shares of SRU with a total value of around $600. My average buying price is $27.07 per share, and SRU takes up around 4% of my entire portfolio. My all-time return is around 8% up, meaning that I have gained around $45 since I invested in this REIT. Overall, I think SRU is a pretty good REIT. Firstly, it is the largest landlord of Walmart. Walmart is not going to anywhere. We all shop in Walmart sometime. So as long as Walmart are doing their business in Canada and have a good business, they will keep paying rent to SRU. And by investing in SRU, we can share a certain amount of the rent collected from them. Secondly, I really like the strategy that SRU is applying, that transferring from a shopping center into a city center. The advantage of SRU is that we all know those big supermarkets all are built in good locations so that people have easy access to shopping there. SRU already have properties in those locations, and all they need to do is to build new residentials around there. Great location, you have shopping center and easy access, that will be a great place for most tenants. So in the future, I really look good for SRU. Thirdly, SRU paying a pretty high dividend, over 6%, and they did not cut their dividend, even during the pandemic. That is a really good news for us dividend investors. What do you think of SRU? Do you already hold SRU in your portfolio? Or after watching my video, you are going to buy it or add it to your watch list? Please share your thoughts with me in the comments. Thanks for watching my video. If you like it, hit the like button to let me know. If you are looking for a zero commission fee platform to invest stocks, I recommend you Wealthsimple Trade. If you are looking for high interest saving account, Wealthsimple Cash offers 0.77% interest and EQ Bank offers you 1.25% interest, which are all higher than the big banks. Check out my referral links in the description to get a referral bonus when opening these accounts. Thanks again for watching my video, and I'll see you in my next video.